Ladies and gentlemen, boys and girls, people, welcome to the show. I'm Justin. This is Pansy. It's Friends with Benefits podcast. Thank you all for uh, jumping on and watching and taking part. And again, I do want to reiterate how much I appreciate the folks that are supporting us, that continually watch our shows and give us feedback. It means a lot. If you're
Yes,
new,
welcome everyone. Thank you.
yeah, how you doing, Pansy? By the way,
I'm okay.
okay,
How
just
are you?
I'm okay. I'm
Well, yeah, I mean, I'm here. I'm
It's
doing
one.
all right.
It's all right. It's all right. This is a part of the game, right? You have great days and you have not so great days, but either way,
I'm
uh,
here. I can sit up and speak and smile and,
right.
have a conversation. So I suppose I should be very grateful.
You suppose you should be very grateful. We
Yes.
got to work on that. We got to work on that. I always talk about vitamin G, which
Oh,
is
yeah, this
which is
again.
being gratefulness, which it really does. I mean, there's literally studies that show waking up and the first thing thinking of things that you're grateful for, it just sets you up for a different experience for your day. So just FYI. But if you're new, if you're watching us for the first time, please do like and subscribe. It really does help us. And give us feedback too. We want to know what you guys want to hear about, what you guys like, what you guys don't like. It helps us to better curate this show for
And
what
if you're interested in being a guest, let us know.
that as
You know.
well. Yeah. We love entrepreneurs, real estate investors, what have you, lenders, you name it. If you're in the world of entrepreneurship, investing, and especially real estate, let us know. And also networking. That I think we need to reiterate a little bit about what we're all about. So, because I think sometimes people come and they're not quite sure, and that's on us. But what this podcast is, what our community is about. Well, what I was getting at though is this community is about networking. It's about bringing together entrepreneurs, aspiring entrepreneurs, and people who need and want help in their journey and to build their networks. And it's all about collaboration. Our buddy JJ Azizian, and I'll put a link to his site and his networking group in here as well. But it's about that collaboration. It's about building your network. It's about meeting new people. It's about learning together and bringing up the folks that are coming up, especially if you've already achieved your success. It's about reaching down and pulling up the folks that are coming up under you. So that's what this is really about. For me and Pansy, we both enjoy learning about this stuff. So we enjoy talking to the people who are where we want to be and people who are you know, growing just like we want to grow. So that's what the community is about, just to reiterate that. We do have a really special guest today that I'm excited to interview, and we'll get into that. The title of the show is Lending by Investors for Investors. And this is one of those topics that I really enjoy personally because it's one of those topics that if you're getting into investing, especially real estate investing, or even just investing in general, you need to understand where the money comes from, how to get the money, how to properly deploy the money, and how to see a return from that money. A lot of people have gotten in trouble as of late. A lot of people have gotten in trouble because, well, for many reasons, but one of the reasons is not understanding maybe their numbers, maybe not understanding what other funding opportunities are available to them out there, or products are available to them out there. There's a number of reasons, but understanding the finance side, the raising capital side, these are all really important topics to understand. If you were to ask Pace Morby or Jamil or any of the our mentors, and if you don't know who they are, go look them up. Pace Morby, Jamil Damji, um, and others. If you ask them, one of the questions they've already been asked is, if you could go back and talk to your younger self, what would you tell yourself? And the answer is always pretty much the same. Learn the raising capital side, learn the funding side, right? And so that's what we're going to get into. So without further ado, I'm going to bring up our guest, Bob McIntosh. Bob, how are you, sir?
I'm fantastic. Thank you for having me here and for everyone watching this live or on the replay. Thank you guys for your time. It's the most valuable thing you can give, and I don't take that
Thanks for
lightly.
joining. Appreciate you.
Yeah, absolutely. Absolutely. Well, so Bob, for folks that don't know who you are, why don't you give us a little rundown? Where do you hail from? What got you into real estate and this whole thing and lending to begin with? Give us a little bit of that.
Yeah, absolutely. So this is the shortened version of my story a little bit. Grew up in Buffalo, New York. My dad was an entrepreneur always. Many of you probably know him or have heard of him. His name is Coach Rob McIntosh. He's a fantastic coach, by the way. So if you ever need coaching, he's a guy to reach out to. But
Nice.
um, he was an entrepreneur and he did a lot of things. So I was kind of saw that growing up, and then I went to college and I got a good job. And there's nothing wrong with it. Like I mean, it was good. It paid well. I lived in Chicago actually. That's where I lived for the job. I moved there, and I was fortunate enough to graduate college with about $10,000 left, courtesy of my parents and my grandparents and just what they had done for me.
Hmm.
And I remember thinking, what am I going to do with this? And, I was like, oh, maybe I should travel. I should go. Someone's like, go backpack Europe or, whatever. And I was always like, no, I got to do something with it that's going to like help me down the road. That's what I wanted to do
Yeah.
with it. And
Yeah.
I couldn't figure out what that was. I spent probably almost 2 years in analysis paralysis of ideas until I finally read Rich Dad Poor Dad. And he talked about real estate. And I was like, ooh, real estate. That's interesting. And used that 10,000 to buy my very first duplex for $110,000 back when 2008, when you could just go get a bank mortgage and it was actually fairly easy.
Right.
If as long as you're putting 10% down, they didn't seem to really care too much.
Yeah.
I had a W-2 job, so on paper I was bankable, if you will. And that was the start of the journey. I was like, okay, this is awesome. I'm making about 200 bucks a month. It's nothing crazy, but it's a good start. And I was like, well, I'm going to need a lot more of those to replace my income and a whole lot more to be where I want to be.
Yeah.
And I can't keep saving up 10 grand because, I was getting paid about 60 grand at that point in time. Take a lot of time to build that up. And I was like,
Yep.
I got to get it faster. So I started getting into flipping and I worked with my dad on that. And now we flipped, I don't even know how many houses. I've lost track, to be honest. And during that, I got very good. I moved to Los Angeles. And during that time, we were doing all our flips in Buffalo. So I had to get good at how do I do flipping from 3,000 miles away. Now, mind you, this is Skype is still a thing. FaceTime didn't exist. We're like iPhone V2 at this point in time. The idea of sharing files without your own server was a whole new idea. Dropbox had just come out. It's like, oh my God, I can share files on the internet. This is interesting.
Yeah.
Um, and yeah, and so I got good at digital marketing, and through that was fortunate enough to be able to build a marketing program for what was at the time the largest real estate education company in the world, both in dollars and in students. From then, I've had over 4,000 hours on stage teaching digital marketing to other entrepreneurs, and through that journey, have been able to do a lot of other things, such as launch our own fund. We have our own lending arm now. I run a marketing agency full time that just helps with real estate investors and people on the real estate or service providers ancillary to the real estate space. And yeah, I've just done a lot of other things in real estate. And now I don't flip anymore. If I don't flip another house, it'll probably be too soon, to be honest. But I do have a small portfolio of 34 rentals, and we're growing that. And actually, ironically, I'm looking at probably selling that soon and 1031ing it into something bigger because we bought all of that. And by the way, this is a little fun fact about raising money, a little tidbit. We own it's about 2.5, $2.75 million worth of property. I bought all of that with $20,000 of my own money, and I've actually pulled out 40,000 from that. So technically, I've been paid to buy almost $2.5 million worth of property that we now own, rent, and manage. Raising money is an important skill, but also understanding where and how and when to plug in different kind of money to help you and your business grow is very, very, very important. And that's what we're talking about tonight. So I'll leave with that little tidbit.
No, that's a we could talk about that for, I mean, the next 10 hours. And again, raising capital. So let me ask you a question. So I love hearing about the first deal. I like hearing about, you spoke about how you got into your first deal in 2008. That was a rough time, at
It
least
was a
as
disaster.
time went on. Yeah, I mean, it was a disaster. What did that really look like for you? You said you were making about 200 bucks a month on that deal, and you
So
got it.
that one was just a good thing. So I got lucky on that one, but our first flip was the opposite story. So I'll tell
Was
that one,
it?
but I'll give a
Yeah, let's hear
brief
it.
on the other. So I grew up in a small town called Lockport, New York. My parents lived there until just a couple of years ago, actually. It's about 45 minutes north of Buffalo, about 30 minutes east of Niagara Falls. Very small town, 20,000 people, 30,000 people in that range, right?
Yeah.
Buffalo never saw the whole Buffalo market never saw the crazy appreciation in 2004, 5, 6, 7 in that time frame. Never had it, right? So there was never a crash back down in Buffalo either. Even through the worst of that recession, the Great Recession there, Lockport and my little rental was still appreciating. Now, albeit it was appreciating at about 1/4% on a $110,000 property, so it's not much. Buffalo is a fantastic cash flow market. It is a terrible appreciation market.
Yeah.
For fun fact, that property I bought in 2008 for 110 today is worth, so what are we? I bought it in 2008, so we are what, 16 years later, 15, whatever that is.
Yeah.
I don't do math well.
Yeah. Yeah.
That's worth about 170,000 today. So that's all I've gotten, $50,000, $60,000 in appreciation over 15 years. So not very much,
Yeah.
but it's cash flowed
It's actually
since
17 years. 17
17.
years. You're
Okay.
almost
Yeah.
going pushing 20,
Yeah, I know.
right?
I
Yeah.
know. Don't tell me that. But yeah,
Yeah.
so it's appreciated a little bit, but it's cash flowed since day one, right? Literally from day one. And ironically, I can it was a duplex. I could lose half the duplex's rent, so one side, and I'm still break even on that, right? So it's just a great cash flow deal, and that's
Great.
what we bought. Yeah.
Yeah.
Now
So
our first
you bought,
rehab,
well, so you bought for the cash flow. I mean,
correct.
you looked at and bought for that. And for anyone, that's what we look at too. Obviously, now I don't want to get into this too much, but obviously, appraisal or appreciation is kind of like the cherry on top. That's how I look at it. And if you're buying for cash flow, um, as long as your numbers are right, it's difficult to go wrong too much, right? I mean, obviously there's extenuating circumstances that can happen, but for the most part, from my education, I don't know if you agree with this, but that's how I look at every deal is like, what's the return on my time and invest and dollars on this, and what's the cash flow, right? What's it going to cash
Yeah.
flow? So,
I have a very different take. Cash flow is fantastic and it's a great thing, but never at the expense of overpaying for property. You will
oh,
never,
sure.
ever, ever, ever see me overpay. Or even if like, hey, because I see this all the time, right? Like, oh, it doesn't matter at cash flows. No, because if you have to offload a property for whatever reason, right?
Yeah,
It could be any number of 100 reasons that you need
yeah,
to suddenly offload a property. And I'm
yeah,
going to tell you right now, cash flow is great as long as the cash is coming in. But when
yeah,
times get hard, and most of the last few years have been very, very easy times,
yeah,
right? Right. When we bought a lot of our rentals in 2008, 9, 10, when things were not easy, cash doesn't come in. Guess what? It doesn't matter what you say. It doesn't matter what your laws are, and it doesn't matter if you bought in a landlord-friendly state. If someone doesn't pay, someone doesn't pay. That cash has
yeah,
got to come from someplace. So
yeah.
cash flow is great, but never at the expense of overpaying for property. Because if you need to offload it quickly, you need to be able to do that, and that option can save your skin. And I will tell you, it has saved mine in the past. The ability for us to do that, or for the ability for us because we bought it below market to tap into that equity to get through something that was a bad deal or didn't make sense, or where, man, something there isn't any cash and I need to pull something out. How can I do that?
That's a
That's
really good
saved
point.
my butt.
Yeah, that's a really good point. And you feel the same way, even if it's a creative deal as well, right? Is that kind
I
of
think
still
even
even more
more if
so?
it's a creative
Yeah,
deal, because
yeah,
here's why, right? On the property, I don't have any creative deals specifically. Not that I don't like them. I have access to plenty of cash, so there's no reason for me to do those deals in most cases.
hmm
Um, when it's a creative deal, guess what? Now someone else's life is on the line. You fuck up, excuse my language, but you
yeah,
mess up, right? Now you've ruined not just your life and your cash flow, potentially your finances. You also potentially have ruined somebody else's. And I get that they're structured the right way and there's all these things, right? But those people that you're working with, they don't think that way. So just understand that, right? Like,
yeah,
and this is I am preaching this more heavily now because there is almost no doubt we're in a recession. There's just almost no way, right? I just saw a post the other day that said if you remove AI growth and data center growth from the GDP of the country, the actual GDP growth is 0.1%. And by the way, the government spending is about 0.5% of the GDP extra this year. So really what that means is there was no growth in the private market except for in two sectors that don't have anything to do with what we do for the most part, which
Yeah.
means, hey, we're not in a good space, right?
Yeah.
People's wallets are tightening up. And the moment that cash flow stops or becomes lesser, if you don't have a way to exit a deal, you're going to find yourself burned very quickly. And the worst thing, right? Like I'm going to transparently, I basically was like one step shy of bankrupted not that long ago, but I was
Hmm.
able to keep all of my properties. Why? Because the cash flow was great and the price and valuation was great as well. So I wasn't forced to do that. Most of my rentals, I can lose almost 50% of the cash flow on them and still break even because they were bought at the right price. And that's something that as we go into tighter times, right? Most people who are doing real estate investing they didn't go through 2008, 9, 10,
Yeah.
where it was like, ooh, man, this is some ugly stuff right now.
Right.
And it may not be the same ugly, but it's still going to be ugly. And so, just protect what you've built. If you're going to put the effort in, make sure you protect it.
Yeah, that's a really, really good point. And I've heard you talk about before. I think you were one of the few people that came out and said it. And correct me if I'm wrong here, but I think you had said it to a certain degree. You said, look, creative is not the answer for everything, first of all. And number two, sometimes people need to go through a foreclosure. Sometimes a foreclosure needs to happen, right?
Yep.
I'm pretty sure you're one of the first people that I heard saying that, especially when the whole creative and sub two fervor was out there, like getting started, and a lot of people were kind of jumping on the bandwagon. I think you were one of the first people I heard talking like that, which is good. And people need to hear that, right? Because it's just like you said, it's not just your life that you're going to screw up on those creative deals, it's somebody else's. So anyway, so you'd begun to talk about the flip that you guys had messed up, and I think I cut you off a little bit on that
That's
one.
okay.
So I apologize.
Yeah, no,
Yeah.
it's good. That was a disaster, right? We bought it at the
Yeah.
wrong price, wrong idea, wrong contractor. Everything you
Yeah.
could do wrong, we did wrong in a single deal.
Yeah.
And that money, because I was 20 something years old, I had a job, but my $10,000 I had saved up to my name was in this rental. So it
Yeah.
was my parents. It was my parents' money. And so I had to figure out how do I get their money back? And it was like, oh, I can work forever and try to pay back what I lost, or we got to flip more houses to flip our way out of it. So that's what we did. And, have been much more successful since then. Obviously, we figured it out. Not to say that we haven't had losses. By the way, I don't trust anyone who says they've never lost on a deal. You've either not been in real estate long enough, or you're not doing deals, not real deals, right? Or you're just a liar. Like it's only three
Yeah.
options,
Yeah.
right?
I don't think I've
But
talked to one successful person in real estate that hasn't lost money.
Yeah. Now
That's
if you look across the industry, the average investor will lose about 1% of their deals in their lifetime, and that's
yeah.
also for like our fund what we factor in. So when you go to borrow money from a hard money lender, for example, part of what they're factoring in is that 1% of the time, on average, right? Someone's not going to pay back that money, and we have to factor for that. And even if we have the house and we sell the house, and even if that's all good, there's still time factor, there's energy factor, all that. So yeah, but yeah, that deal went sideways. It was just everything that could go wrong went wrong, all of that. But I learned a ton, and we used those lessons to apply to the future rehabs that we did, and grew from there, and have had much, 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 much more success since then.
Yeah, I love that. Now, let's talk a little bit about your social media, like your coaching and or at least some of your educational stuff and marketing, because I really enjoy. I've watched plenty of your real estate investing and marketing content or social media posts. What would you say? And I know we're kind of deviating a little bit from the lending topic a little bit, but for especially new folks that are trying to find deals, that are trying to build their portfolio, trying to really, really get in there and take action. Maybe what's one of the most important things that you would suggest for especially new folks that are getting into it from a marketing perspective?
Yeah. So what we're seeing right now is very reminiscent of 2009, 10, 11 to a certain extent. I'm sorry, not 9, 10, 11, 2014, 15, 16, right?
Oh, interesting. Yeah.
And what that is that it got very hard to find deals.
Yeah.
2009, 10, 11 was super easy to find deals. Why? I mean, this is no joke. Like there was a thing called they were called bank Rio tapes. This is a thing.
Oh,
Literally, they would have like imagine an adding machine. You know how you type in and you enter and it prints it out and it gets that little tape? It's
Yeah.
that, but it was a list of properties. And it'd be like, hey, I got a tape with 150 properties, average is 31,000 per property, $3.1 million. Who wants it? Right. And I
Wow.
mean, you're just buying swaths of property at a time because the banks were so overloaded. They're like, like just sell them for 40 cents on the dollar, just get it off our books.
Yeah.
And we can get into like the mentality of that. I hacked banks for, was my job for a little bit. So I get how banks work. By the way, I did it legally. Let's quantify that.
Yeah.
Yeah.
But yeah,
Not
so it's just a very
illegally
different
hacking
time.
banks, but yeah, yeah,
Yeah.
yeah. I get you.
So it's just a very different time. So what
Yeah.
you're seeing right now is that this is a numbers game, and this is where people get it wrong, in my opinion. You need to understand, and we actually taught this at the at JJ's boot camp that we did the day before his picnic.
Yeah.
And if you're ever out in LA, we'll do it. We should do it again next year, as far as I know. That's the plan. Come out and learn this, but it's a numbers game. Here's the
Yeah.
reality of the numbers today across all real estate in the entire United States. 90% of all properties purchased happen through the MLS. No one wants to admit that. No one wants to talk about it. They want to think, oh, it's creative deals, oh, motivated sellers. Like, but you're ignoring, if you ignore the MLS, you're ignoring 90% of the properties you can buy. Okay. So now imagine for a second that every investor is doing the same thing, which is they're all going after the same 10%. Well, of course, it's going to be harder to find property. And as that 10% shrinks because there's just less properties out there right now for sale, guess what else happens? It gets harder to find those same 10%. So that's number one. You're ignoring your biggest lead source, which is the MLS.
Yeah.
Now, I can get into all the stats and details, but the reality is on the MLS, all right, if your offer is 95% of asking price, you've got a 99% chance of getting it. If your offer is between 80 and 95% of asking price, you drop to about 70% chance. If your offer is below 70% of asking price, you drop to about a 5% chance.
Mhm.
So if we know that these are the facts, these are the numbers, this is what data tells us, and I can pull up, I mean, I have tons of sources of data that support this, including my own business, as well as Brian Fine, one of my business partners.
Mhm.
So what does that mean? It's a numbers game. We got to put out a lot of offers. And a lot of people are going to tell you F off. A lot of people are going to tell you absolutely not. A lot of people are going to tell you all kinds of crazy stuff that you have no idea. But submit your offers. Now, even though your offers go from 95 to 70 to 5 in terms of acceptance based on those ratios, your offers should be opposite. You're going to put about 95% of your offers at below 70%. You're going to put a little bit less and a little bit less as you go up, because that's just how it works, because we're not trying to buy retail houses, not for most of us anyways.
Right.
Right? Now, when you do that, here's the interesting thing, because a lot of you are creative folks. You put an offer in, they're going to probably tell you to F off, but it gives you a reason to come back and offer a creative solution if it makes sense, if the numbers jive, if it works, right? But I would challenge everyone who's telling me it's hard to find deals, because the good investors I know are not having any problem finding deals, but they're also operating differently, right? So if I want to close 12 properties this year, okay? Let's run the numbers backwards. And that's one a month. And maybe that's good for you. Maybe it's not. I don't know. Whatever you're at, doesn't matter. Pick your number for the next 12 months. Let's say 2026. And we're going to assume that the market conditions today are going to be the same. I think they'll probably be worse by the end of next year. But and by the way, as they get worse, as market conditions get worse, it gets better for us, for investors, because more folks struggle, more folks have to sell. So it can only get better for us really from here. But let's assume the same market conditions. Well, the numbers show me that for every one house that I want to buy, I need to basically submit offers on about 100 houses to start with. So when you start doing that math, that means I got to put in 100 offers a month if I'm trying to do 12 deals a year. How many of you are doing 100 offers a month right now to get that? Now, if we run those numbers backwards, that means 90 offers are on the MLS, 10 offers are someplace else. I would be willing to bet that very few of you are doing that volume of offers to get to that, whatever it is, and just work your numbers backwards. Now, there's market variables, and we won't get into all that, right? Like if you're in a market like Buffalo that I operate in, it's going to be closer to about 65 or 70 offers before you get a deal. But that same deal might only net you 25 or 30,000 if it's a flip. It might net you, 200 to 500 bucks a month if it's a rental. If I'm in LA, right, it's going to be probably closer to 120, 130, maybe even 150 offers to get a deal. But that same flip's going to should make me 50, 60,000 to 100 to 110,000, depending on where. And a rental, well, I wouldn't buy a rental in California, so I'll skip that. That's insanity. You shouldn't do that. But,
Yeah. Yeah.
but you
You're
get the
talking
idea,
crazy
right?
now. You're talking crazy now.
Adjust.
Yeah. 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 You're talking crazy if you're buying a rental
Yeah.
in California.
Now, the
There
last
are
part of this is that
people.
most people have no system. So this is what we do, right? Like we do marketing. So we have a CRM that helps manage that system because there's no way you're keeping track of 100 offers a month every month. And by the way, that's if you want to buy 12 properties this year. If you want to be a go-getter and get 25 properties, double that. Now I'm saying 2,400 offers in the course of a year. That's
Yeah.
200 offers a month. You got to find, and by the way, that's offers submitted. That's not properties that I look at, which means I'm probably, for every 50 houses I look at, I'm choosing one to make an offer on. And I'm just guesstimating, right? It depends. MLS numbers, you're going to look at a lot more to get a lot less. Off market deals, you're going to look at a lot less to get a lot more. So depending on where your marketing efforts go. But just understand that that's the game. That's where we're at. The day of just finding properties and having them fall in your lap is not the case. You're going to have to work for it. And what I'm going to be straight with you, most investors are lazy. They are
Yeah.
straight up lazy.
I can
If you're not
attest to
submitting
that.
100 offers, yeah. If you're not submitting 100
attest to
offers,
that.
don't talk to me. Don't
Yeah.
even don't tell me you can't find. No, go put the work in.
Yeah. Yeah, hey, look, people don't like to hear that. I know, because I'm
I
one of
never
those
do.
people, but it's the facts. And I mean, it's, when we were doing direct to agent stuff, I mean, yeah, we were not, plain and simple, we were just not hitting our numbers. We were not hitting
We're not now. We're definitely not
we're
putting
not,
in
well,
enough.
we're not now, but at least we have a much better idea of what our goals are and what we're trying to achieve.
We're
And
looking
we've
at
also
more,
we're definitely
for
looking more, but
sure.
we also have better strategic partnerships too to make things happen, right? Because if you don't have the capital just ready and sitting in the bank ready to go, you need to understand, one, either how to find the funding, raise the funding, or you need to take a different approach on the deals that you are finding. Do you understand how to manage a deal? Do you understand how to underwrite? Do you understand, like, where's your value in the deal, right? So you
100%.
gotta understand that. But that's, look, and it's a part of the game, and it's a part of figuring out what you want and where you're at, right? And being honest with yourself about it. For me, wholesaling was not where I was at. I mean, I tried it, and I really did. I got one deal. It took me about a year to get my first deal, and I had to be honest with myself. And this was after Pansy I got together. I had to be honest with myself, like, this, my head wasn't in it. I didn't enjoy it. You know, I didn't enjoy the process. I didn't enjoy what I was doing. And so, but what
Can
did
I want to
y'all?
interrupt just for a second on that.
Yeah.
I challenge Justin, you and Pansy, and anyone else listening or watching this.
Hmm.
So you made a statement. I didn't enjoy the process,
Hmm.
and I want to challenge that.
Hmm.
When you fall in love with the process, the results will follow. So you
Hmm.
might not like wholesaling, but the reality is 90% of wholesaling is the same if I'm flipping or buying a rental because I got to go out, I got to put the offer in, I got to evaluate the property. It's mostly the same. So
Yeah.
I challenge each and every one of you guys to fall in love with the process because you know the outcome is what you're after. And you
Yeah.
may not always like the deal that you're working on. You may not always like what's going on, but the thing that no one ever talks about, we always look at like the glamour of this business. I look at the houses we're buying and all this stuff, but the reality is 90% of this business is numbers analysis and just a lot of repetitive work. And I
Yeah.
promise you, if you train yourself to love the process, and it will take time. I'm not going to say it was easy for me to do this either, but if you train yourself to love the process, because you understand that, hey, I have any exit, I can buy and hold, I can flip, I can, rehab, I can burr, I can I can whatever, right? Wholesale, all these things. The right exit strategy will find itself. And what you'll find is that now all of a sudden the deals become easier and the process becomes more fun because you trained yourself to love the process. I know that's not easy to do. I get it. But I promise you it will make a big difference in your outcome and your results.
What did you do to train yourself to love the process? I'm curious. What did that look like for
I had
you?
to reframe it. So, and thank you for asking the question. I was hoping you would. If not, I was going to lead you there either way. So you said I didn't like wholesaling. Lots of people don't like wholesaling. I was not a wholesaler. It's not my jam, but I also understood a couple things. Wholesaling does several things for me. It allows me to buy properties to rehab. Why? Because I can make an easy 10, 15 grand in Buffalo on a wholesale deal. You in LA could probably do a whole lot more. In other areas could, make a lot more money, sure. But guess what that did? That one wholesale that I did this month paid for marketing and effort and energy to go put offers in on the rehabs that I really wanted to do, the buy and holds that I wanted to acquire over time. So I fell in love with the process of wholesaling, not because I like wholesaling, but because it enabled me to be one step closer to the end goal that I was after. That's number one. Number two, is that once I understood it was a numbers game, I didn't get that for a long time. Actually, it's a funny story. I bought a coaching program, got in, and the first thing they said is watch this 8-week marketing course. I was like, I don't care about marketing. I want to flip a house. I don't want to do marketing, right? I didn't get it. Marketing is like, well, you want to flip a house, you got to get houses to flip. You got to get houses to flip. Guess what that is? That's marketing, right?
Yeah.
And like I was just a naive, kid, so I get it, right? And maybe you guys aren't there, but understand that, like, hey, if someone had told me back in 2010 when I first bought that coaching program and trying to scale that I got to go put in offers at that rate, now I wouldn't have had to do quite as many as I now because 10 was a lot easier to find deals. But it still took time to find deals, right? As I learned to understand and appreciate the numbers, I learned to love a no because a no was like, oh man, I'm getting one close to, yep. All right, we're at 78 no's. We're getting down there. Oh, look, we're
I
at
like that.
87
Yeah.
no's. There's the yes, boom. And then I would celebrate that. And this is the important part that no one talks about either. And I'm going to shout out to Fortune Builders from back in the day. They had these shirts made that said CAW, celebrate all wins. The moment you get a yes, even if the deal falls apart later on, it doesn't matter. Celebrate it somehow, whatever that looks like for you. For me, that might have been like, look, I did the work this week. I get to go have fun this weekend. Okay. I was 20, so that might mean, partying, going to a bar, whatever, maybe a little, more lower key today since I'm, 42 now, but you get the idea, right?
Yeah.
Fun changes. So celebrate that and treat yourself to the thing and understand that not every day has to be the grind, but you don't get to earn the reward if you didn't put the grind in. And so if you're saying, I can't find deals, I can't get deals, whatever, I guarantee you're not putting the effort in, or you're putting effort in, but you're putting it in the wrong place. Nothing else. If you can't find deals right now, you need deals. 100% of your effort needs to be on finding deals, putting offers out. And by the way, just submit crazy offers on the MLS. I promise you, you will be shocked. If you submit this month 100 offers on MLS properties, you'll get 1 or 2 that will say yes. You'll get 10 that'll say I'm thinking about it and will counter. Maybe it works, maybe it doesn't. But you'll be surprised. It will work.
Yeah.
Particularly if you're in like markets like Florida, for example, even better right now.
Yeah. And we're looking in Jacksonville. We're actually looking in Tennessee as well. Parts of Tennessee anyway. So yeah, really, really good stuff. Well, let's segue this into the lending portion. I'd like to kind of know how you kind of found yourself in that arena, or what moved you into that arena, and what are some really good pointers, and we can get into this, but what are some really good tips for folks, especially new folks that are maybe in the process of building their portfolio, maybe they've already got some properties in their portfolio. What are some things that they can do to kind of increase their odds, especially of getting the funding that they need? And but yeah, we'll start with how you kind of got into it. What got you into
Yeah.
it?
So, like everyone, right? When we started, I had little to no money. Banks was an option for my first property, but very quickly became not an option, as you can imagine. 9, 10, 8, 9, 10, late 8, 9, and 10. No, like banks weren't giving out money to anybody. Um,
It's
and if
getting
they
tighter
were,
now too. It's getting tighter
yeah,
now.
it is. It is absolutely. So we had to figure out other ways. Right now, it was a very different world back then. So I want to quantify some things I'm going to say. For example, my first hard money lender was a local guy. He charged me 15% and 5 points. I'm still a little raw from that deal. I won't lie,
Yeah.
but that's okay. Got the deal done. Guess what? That property, I think we made $22,000 on, even after paying him 15 and 5. Right. So a good deal is a good deal. The money is irrelevant. And that was a hard lesson for me to learn. The money is irrelevant if the deal is correct. Everyone always talks about if you get a good deal, the money will follow. And then everyone's like, oh, I got a deal, but no money's following. And you don't have a deal. I promise you. If the deal is good, the money will be there. We run a fund right now and a lending arm. And I can tell you right now, we'll underwrite your deal. If the deal is good, there's money to be had. There's $50 billion in hard money circulating through the industry every single year. Okay, $50 billion is available for you to tap into. So the money is there for you, right? And that doesn't include private money from private lenders, like individual private lenders. By the way, not private lenders who are hard money lenders. I can't stand that co-opting of that term. That's a whole different.
Yeah, it's so annoying because
Yeah,
I'll
you're not
reach out
private.
to
It's fine.
people and I'm like, no, I'm looking for private money.
True private
Well,
money.
it's all private money. Yeah, but it's still institutional. You
Yep.
still have it set up that way. So no, it's not what I'm looking for, right?
Correct. Yep. Yeah. It's the co-opting term, and I get why they did it. It's a good marketing play, but it's bad. But anyways, we've been fortunate enough to raise great great true private lenders, right? While we were flipping for the last 5 years of flipping, I didn't put a single penny of my money into any deal that we were flipping. I didn't make a single monthly payment. Every single deal that I did was paid at the sale of the deal. Now, I might have paid a bit of a premium for that, but it helped me manage my cash flow. So
Yes.
how did I do that? Social media, straight up, just constantly talking, documenting, and being out there. The last year that we flipped houses, which is 2017, I did the year of engagement. I did 272 live videos because that was when live video was brand new on Facebook. 272 live videos over the course of 1 year, right? And that doesn't include any other podcasts, speaking engagements. I spoke 36 events that year on top of it, 3 days each, right? Like, so understand that just being out there a ton will help. You may not get, like, this is no joke. My very first live was on if you remember, like Meerkat and what was the one that
I
Twitter
remember your
acquired?
guy, yeah.
Yeah, like those.
Yeah.
I had 9 views, not people, 9 views. 2 of those were my mom. She was like, "Oh, look, you're live," and I was like, "Oh, thanks."
Yeah.
Right. So but that's where it started. That, and then and that was where it started in 2015, and it grew to 2017, and from there. So just stay consistent with that. Now, the
Yeah.
other thing is, too many people spend too much time hunting for the best rates in money. And I don't have I was hoping I had the chart in front of me. I can't find the graphic right now, but I can, Brian will have it. If your audience wants it, I'll
Well,
hunt
you're
it down and give
speaking
it
to
to
the
you.
choir here because that's been my I've made that mistake as well.
Yeah.
Yeah.
The rate you pay for money is irrelevant,
Yeah.
right? It really is. We've been able to show that on, like, hard money, for example, all the hard money is at a max variance of about 1.5 to maybe 2 points total on each other, whether that's in interest or points or however it's dissected up.
Yeah.
That kind of money is irrelevant to the bigger picture of any deal you're doing. What's more relevant is speed to close and actually being able to close, actually being able to do what you say you're going to do. And by the way, if you're looking for a lender who you want to work with, go back to the same lender over and over and over and over. Because I'm going to tell you right now, for example, our average deal with a person with average credit in an average city is 75% of the purchase price and 100% of the rehab, if you're doing a rehab, right? Which is very standard. We're not special in that capacity.
Yeah.
But for our premium borrowers, the one who've done enough deals with us, we can go as high as 80, sometimes 85% of purchase price. So understand that you spending the time to build a relationship, and even if that guy that you're borrowing money from is 1 point higher and you could save a point, right? Imagine what being able to have an extra 10% of your money needs funded without having to go find that money someplace else would do for your business, because you paid 1 point on 4, 5, 6 extra loans. The long term of that is here. The reason that I can confidently say that my last 5 years of flipping, I never put a penny in and I borrowed private money, is not because I'm some genius that figured out something no one else did. I just was able to show for a consistent period of time, I'm a legitimate borrower who pays back their lenders every time, even if things go wrong,
Yeah.
especially when they go wrong. And if you
Yeah.
do that, you'll raise great true private money. And by the way, if you do that, lenders, like Always Capital, my lending arm, we'll look at that and say, yeah, we want to give you money as well. Money goes to where money is treated with respect. And
Yeah.
so if you understand that, money will follow, and it becomes much, much easier. Now, the other part you got to understand is that money's got to move, right? So you borrow money for a flip, you got to get that thing done. Don't let it sit. And I get that that's not always in your control, but that's some of where your due diligence comes in. Understanding, saying, well, it's a slower market here in Florida. If I got a whole house, I thought I could sell it probably in 2 or 3 months, but right now that might take 9 months. And I need to be prepared for that. So I got to factor that in my purchase price and narrow it down. And if I'm wrong and it sells in 2 months, great. I just made a bunch of extra money. If I'm right, though, guess what? At least I'm not finding myself on the short end of the stick.
Yeah. Yeah. That's a really good point. I mean, look, this is why, for me, this is why I spent as much time as I did, one, networking, but also two, learning how to understand the numbers, learning the underwriting and the number side of it. A lot of people, I've talked to plenty of people who are claim to be real estate investors, and they don't get the numbers at all. And it's okay if that's where you're at too. There's nothing. Look, some people are just not good with numbers. It doesn't, it's just
It's
something
okay.
but yeah, that totally,
But then you got to
should
find someone who
alleviate.
is. You
Yeah,
got to, because
that's
if you
what I'd
don't,
say.
you're gonna burn yourself at some
Yeah,
point.
exactly. You need to, partner with somebody, build a relationship with someone you trust that does understand the numbers, because otherwise you're just You're setting yourself up for massive failure otherwise. And I know, look, I invested in a bad deal and lost money, and it's because I trusted incorrectly trusted that the people who were um, putting together the investment understood what they were doing, right? Understood
Yep.
the numbers, right? And that's on me. Like I take that responsibility. That's completely 100% on me because I didn't do the underwriting. I didn't do my underwriting myself, right? On the deal. But you live and you learn, right? And so one of the things I liked, and I talked to Brian about this, we had a little discussion about this, but one of the things I really like about uh, what you guys are doing is you're incorporating AI into some of the engagement and some of the process that you guys have on the lending side. And you also you guys are really about the relationships, and you're about someone can come to you, you're going to underwrite the deal with them, right? You're going to look at the deal with them. Um, and I know that that's not anything necessarily that makes you guys special, but what does make you guys special in my eyes is you're willing to help the new folks too. You're willing to bring, help the new folks figure it out, right? Um, on the deals that they're bringing you guys, and really interested in building those relationships. So I like that a lot about what you guys are doing. Maybe you can talk a little bit about that. It seems to me like, if I'm a new investor and maybe I'm not 100% confident on my numbers, can I just come bring that to you guys, and you guys look at it with me, right? If obviously if I am interested in borrowing the capital from you guys, right? But you're going to look at that with me, right? You're going to go through that deal with me, right?
Yeah, to an extent, right? So also
Yeah.
understand, right, that you've got to know your numbers
Yeah.
inside and out. You got to be pretty confident in them. But what we're gonna do when we look at your deal is we're your second set of eyes.
Yeah.
So when you ran your numbers, we're gonna be able to go through them all and say something doesn't add up here, right?
Yeah.
We're gonna run what we call a quick appraisal. So that's gonna be, we call it the scroll by, which is I'm hopping on the computer, I'm going to Zillow, I'm going to places like that, I'm looking at closed properties that I can publicly access quickly to assess where you're at. Perfect example, we had a deal recently came to us. He said the ARV in the property was 3.5 million. We said, okay, great. I said, hey, we went back to him and said, can you show me how you got to that number? Because I can't find a single property anywhere on the island that you're buying this on, or a peninsula that you're buying this on. The highest value property was 1.5 that has ever sold in the last 5 years. So tell me how you arrived at 3.5, because that's a big difference. Now
Yeah.
he showed us how he got to his number and said, here's why. It actually turns out it was like three different properties that were on the property. So, it
So
was
it was a
about 1
portfolio
million.
deal that he was looking
Yeah,
at.
yeah,
Yeah.
yeah. But there was details that weren't there. So
Yeah.
what you got to understand, right, is if you're a newbie, right, and even if you're a moderately experienced investor, because sometimes even honestly, sometimes the moderate investors are even worse at this because they get overconfident and they
Yeah.
think that a deal's a good deal when it's really not. And I can tell you right now, deal six for me was a loss. Why? Because I got confident. Oh, I know what I'm doing. This is a good deal. We're gonna do it.
Mhm.
Got cocky, got burned.
Yeah.
So
Yeah.
the you got to look at to learn sorry, you got to learn to look at a deal the way a lender looks at a deal, because that's the only thing that matters, because the
Yeah.
money's got to come from someplace,
Yeah.
right? If it's your money, well, then you want to make sure you don't lose it. It's your hard-earned cash. If it's someone
Yeah.
else's cash, they want to make sure you don't lose it because it's their hard, like we all work
Yeah.
hard for our money. No one wants to lose it. So you got to start looking at the deal the way that lenders do. And
Yeah.
that's why we have so we have a podcast, for example, and a video show that's called Lenders Lens, which is like all about how do we as lenders underwrite and look at deals, right? So that's part of it. But understand that the most important thing that you can do when you're looking for this is saying, hey, here's my numbers, and don't leave anything out. I can't tell you how many times people are afraid to talk to lenders, and I understand why. So the name of tonight's show was, lending or
Lending by
uh,
investors for investors.
thank you. Lending by investors for investors. Because all of us that started Always Capital were investors first.
Mhm.
And two things were true. One, we kind of got tired of the normal hard money process because it's
Mhm.
run by people who are lenders first, not investors first. They never take the time to understand a deal and where it's going. And
Yeah.
number two is, for us specifically, there was a subset of lending that no one is doing that we are now doing to fill a need that we needed for ourselves. And I was like, well, I'm not trying to recreate the wheel here, but at the same time, I need money for these deals that no one else is lending on, so I got to figure out how I'm doing that.
What
And
type of deals
so
are those?
Yeah. What that was
DSCR
just
loans for properties valued under $100,000.
Okay, yeah, that's a
No
big
one's doing
need.
that.
No,
No one's
nobody,
doing that.
yeah, you're right.
Buffalo,
huge.
perfect market for that. Bryan's market in Pittsburgh, perfect market for that.
Yeah. The
Orange
big growth.
County, terrible market for that. Right?
Yeah.
Yeah, I
Yeah.
So
don't
we
think
know our
that's good
space.
either.
We know our
Yeah.
space.
Yeah,
But
exactly.
understand that, yeah, we'll work with you, right? But I got to know everything. Don't come to me and hide details, because two things will always be true when you hide or lie to a lender. Number one, the deal has a significantly higher probability of falling out and not getting funded. Why? Because you didn't tell me something that's going to impact how I make my decision on what I can do for you. Number two, if you don't tell me about things and you lie to me, I'm probably going to blacklist you from my lending arm, because I know if you're willing to lie about it before we even get to the loan, God knows what else you're going to do when things start going
Exactly.
on in the
Yeah.
property, right? It
Yeah.
doesn't set a good precedent for you as a lender. And by the way, the NPLA, of which we are members, which is the National Private Lenders Association, which encompasses both hard money lenders as well as individual private lenders. It's just the money lending business as a whole. Now has a blacklist of people who have screwed over their lenders.
Good.
Right now, you can't access that as a public. You have to be a member to be able to get access to
Yeah.
it. But guess what? Every name from every single person who comes and gives me a loan will go through that blacklist. And if you were on there because you lied to me about things, guess what? It's not just going to be me that won't lend to you. It's going to be every lender in the $50 billion industry of hard money lending, and whoever's involved in the private lending side that is not going to either. So
Yeah.
I don't mean to scare the crap out of anybody. If you're new, you're like, oh my God, like, holy crap, what do I do now? Right? No, just bring the information to me. If you tell me what's going on, we can find a way to figure it out almost always. Not
Yeah.
every time. If you're like, hey, I'm intentionally trying to screw a lender out of money, that might give me some heart palpitations as a lender. Even though you're
Yeah.
not trying to screw me, you're trying to screw someone else. It's like, well, if you do it to them, why
Right.
won't you do it to me?
But
Right?
it's something, yeah. But I think
Yeah.
that's where people, you know, they're afraid to admit that they messed up somewhere, right? And now
And that's
they've
okay.
got themselves in a situation and they're trying to get themselves out, and they'll
Tell
reach
us.
out to other people and not give all the facts up straight, straight up.
Mhm.
So it does look like they're hiding things and whatever. And, I've been in this situation with people before.
Yeah.
And
Yeah.
as I was trying to help them, more facts would come out. And I'm like, man, you have to give all the facts up front, because otherwise it does look like you're trying to deceive,
Yeah. So you're,
you
yeah,
know?
you're kind
Yeah.
of
And if
just,
you're not really trying to deceive someone and you're really just messed up, you know, let's find the right people that want to help you, but you got to be honest up front. Like,
yeah.
everybody
Yeah.
makes mistakes. Nobody gets it right 100% of the time,
Yeah.
So
Yeah. And by
That's
the
what I
way,
was gonna say.
as your lender, as investors too, like when you come to me and you say, I need to do this is what we're trying to do. You're going to be surprised, because we've got, so across our Always Capital team, for example, we've got over 50 years of investing experience, right? And so I'm going to look at a deal sometimes and say, well, you could do that, but have you thought about this? And we've had a bunch of people go, no, yeah, that makes a lot more sense. I'm like, yeah, it does. Sometimes we'll find ways for your deals to be more profitable just because we understand the market, because we've been doing it for a lot longer.
Yeah. Yeah. That's a big difference with you guys as well that I like a lot. So I do want to caveat something here. I was talking about, if you're a new investor and you have a deal, you're not just going to bring it to them without any numbers, without knowing anything, and they're going to underwrite it for you. So I want to be clear about that.
Yeah. You got to have
What
done
what
the legwork.
they are your second set of eyes. So if you don't understand the numbers, definitely partner with somebody that can help you underwrite, that can help you look at the numbers, or even help you learn how to underwrite. There's a billion and one calculators out there that you can find that can help you with the process. There's a billion and one YouTube videos that go through the process, explain how to do it. Obviously some are better than others, but again, you're going to make mistakes and all that, but have something, you know, underwritten,
solid
at least
to bring.
something, yeah, at least some numbers in place, and the plan for the property. What's your exit strategy, right? Um, all the normal stuff. What's the purchase price? What's the ARV? How did you get to those numbers? What's your plan to exit? All the stuff that you're going to need to present to a lender. I got a perfect example. You were talking about this a little bit ago, but I got a perfect example, of a situation where not understanding what you're doing could put you into a really bad situation, or it put you into a situation where you paid way too much for the property. I had some folks bring us a property, and this happens a lot actually. Bring us a property that claiming to be a 4-bedroom, 2-bathroom, claiming to be a certain number of square footage. When we go look at the assessor site, we go take a look at the assessor's website. Turns out the place is only a 3-bedroom, 1 bathroom, and is like 1,200 square foot. And they're trying to
Oops.
sell it. Yeah, they're trying to sell it as a 4 to 1,600 square foot or whatever. So they're coming up with their purchase price based on those numbers, based on the number of bedrooms and bathrooms, based on that square footage. And here you are about to agree to purchase that property, not understanding that what you're actually buying, none of that work, none of and it's not that the bedrooms and the bathrooms weren't there. It's not that the square footage didn't exist. It's that none of it was permitted. So what does that mean now? You're going to buy a property that none of that work is actually permitted, and you now run the risk of getting red tagged. You're definitely going to have to shell out the money to eventually get it permitted, right? It's not, I mean, again, it's not the end of the world, but why would you acquire a property? Why would you pay for something that's none of the work's actually been completed, right? Or none of the work's been fully completed that you're going to have to shell that money out, right? So
Yeah,
just another example, right?
100%. Am I able to share my screen for a second? I want to show
Of
something
course.
about
Yeah, yeah.
how we look at properties.
Yeah, of course.
I think this will be valuable to everyone. So this is just a random one I pulled up. So this is me looking for money for a deal, right? So here's the property. I got a little photo of it. Here's the address clear so that someone knows. And I'm not saying that you have to do this, but you want to know how I got a bunch of hard money from a bunch of people? This packet right here, as basic and simple as it's going to seem, is what got me more deals, right?
Hmm.
Numbers. Here's the address. Here's how many units. Here's how much I need. Here's the value. I have comparables below. How long we needed the money for, how much we needed, the rate we're offering, and then I gave a like nice little bar chart so they can see over 2 months. The little green line is where they're going to be. The blue line is if they put it in the stock market on average 8% versus us at 10, and if they put it in a CD at the time, I think the CDs were like 2% or something like that. They were super low, right?
Yeah.
So they can see that. Come down here. Here's my comps, and I give them the addresses of the comps. So they're not just saying, well, I think this is worth this much. Here's how I derived the value of this property. So you can see everything there. I have notes on my comparables just so they can understand how did I use this information to come to my conclusion for the value. And then photos. Now, I would also include a link to the repair estimate and all that if I had one. As you can see here, this was a property that was basically already good to go, right? Like we were just buying a good deal that someone didn't want. It didn't, it doesn't really need any work. It's rentable as is. And then I just have some basic disclosures at the end. But that right there, that simple packet right there shows a couple things. Even if you're going to a hard money lender, it says, hey, look, I know what I'm doing. I've got the information. This is how I came to my conclusions. I didn't just pull it out of a magic hat and say, well, I think it's worth this much today because Zillow estimate told me it was, right? Like this is how I actually figured it out. But that's the kind of information, right? When you come to anyone, whether it's a private lender or even us as a hard money lender, right? When you come to us with this kind of information, it shows that you know what you're doing. It shows that you're more prepared, and that is likely to get you more favorable terms because our risk profile is lower. And by the way, the other thing that I want to say is we can get almost any property closed. It's just a matter of adjusting for risk. So you come to me with low credit or no credit, no problem. We can get a deal closed with low and no credit. It's just going to mean you're not going to get 75% purchase and you're not going to get 100% of the rehab. You might get 65 or 55% of purchase and 100% of rehab. That's how we adjust our risk to accommodate for what we don't have. And by the way, if you are in a low or no credit person right now, right, then wholesaling is your best friend. Build up those cash reserves to get you out of whatever issue you have to go get a credit card and start building your credit so that you can go close those deals. In the meantime, get yourself a credit partner, someone who's got a W-2 job, got good credit, but doesn't want to do any of the work. Let they put themselves on the hook for the credit. They get to share in the profit. But guess what? You get a deal that you wouldn't have gotten otherwise, or you get better terms.
Yeah, there's a great trick, especially if you have an LLC or you have a business. Write them onto your business as your CFO. Bring them onto your business as your CFO, and you can utilize their credit to acquire the funding that you need, right? So there's a lot of ways to skin that cat. I would say also really quick, one of the pitfalls that I fell into and that I know a lot of other people are falling into is spending way too much time underwriting deals, right? Spend way too much time looking at bad deals, right? Or trying to somehow force it to be a good deal, right? What would you say from your perspective? I don't want to turn this into an underwriting show or anything like that, but when you're looking at a deal, I have kind of my 2-minute process, right? I look to see, is it in a, like, is it in a flood zone? Is it even in a zip code or a market that I'm even interested in? Is it in Florida? Is it a wood frame or a brick? Like brick, or I always forget what they call it. It's not brick, but anyway, is it a brick or a concrete frame home? You know, is it hitting these like very basic markers? And then from there, if it is, then I'll dig in a little bit deeper, right? So, you know, what really quickly try and divulge the ARV of the property. And, you know, for me, I know that most flippers are going to want to pay anywhere from 70, basically 70 to 75% of ARV minus repairs, right? And that's where people are going to be at, right? And so if I can look at it and know it's not there and we're just way too far off on price, um, I'll just move on, right? Or maybe like
Yeah,
you're
and that's
talking
totally
about,
fine
Bob.
too.
Yeah, and what you're talking about too, just shoot the shot, make the offer. Just be like, look, this is where we're at. Here's our offer, right? And we'll see what comes of it, right? So that's kind of my 2 cents on that. I'm curious what your thoughts are on the kind of the quick process of doing it and not wasting hours of your time looking at bad deals. Like have a quick process for looking at them before you spend any more time, you know, like that for example, that printout that you spent that you provided to lenders, that that probably took you a little bit of time to put it together, right? So before you get to
Yeah.
that point where you're spending that time on it, right?
Yeah. That deal was already locked up, ready to go. We just needed the money for it. So I wouldn't do
Yeah,
that if you didn't have the deal already figured out. I'm not going to do that on a deal
right,
that I don't have. But
right.
yeah, look, you want to do rough numbers, you want to get faster at this, then you do the click buy, you know, figuring it out. So I'm going to go to
Yeah.
Zillow. I'm going to get this estimate. I'm going to look at a couple of comps that it's pulling in, say, yep, that seems pretty close. Estimates are usually within about 10%. Now, that can be a big margin in certain cities. I understand that. So take that number, multiply it by 0.9, right? And that's your ARV. Now, figure out your repairs, figure out your number on what your exit strategy is and what you need that for, and then you'll know. It should take you, once you get good at this, it should take you 15 minutes to do that and just to get a ballpark. You don't have to be accurate down to the penny, right?
Mhm.
I'm just trying to say, all right, I know that this property is worth, you know, 1.1. It's going to need 250,000 to work, so I got to buy it for 500,000. He's looking for 1.05. We're not even close. So I'm going to put my offer in where it needs to be. They're probably going to tell me to, go pound sand, but that's
Outstanding. Yeah.
fine.
Mhm.
But at the same time, guess what? You'd be surprised how many times we submit offers and then they come back. And by the way, the other part, especially for MLS deals, this is 100% true, is you have to follow up on your offer every single week until the house closes.
Yeah.
Every single week on every single property. And I know that sounds annoying because it is. This is why it takes time, but I
Yeah.
promise you will.
Yeah.
Of all the MLS deals we've bought, I never bought a single one from our first offer. Not one of them came from our first offer. It came from offer 2, 3, 4, 5, 6, 10 later after one.
Yeah.
We bought one. We put an offer in. She told me the agent told my agent to F off. Literally, she told her to F off. We said, okay, no problem. Guess what we bought that house for? Exactly the price I submitted on the first offer.
I've heard
Why?
that so many
Because
times.
because
Yeah.
3 buyers falling out later in 6 months of time wasted, they were like, I just need to get closed. And I'm like, well, let's go. This is our offer. I should have actually lowered the price, but hey, it is what it is.
Yeah.
But yeah, no,
Yeah.
just don't spend a ton of time getting the details right, right? If the buyer responds and they're receptive to your very low ball offer or to your, if you're doing a creative deal, to your creative financing and that number makes sense, then spend some more time, run some comps, get someone with an ML who has access to MLS to pull actual data for you. Right? Use Redfin, use Zillow, use Trulia to get even closer. If you have third-party appraisal software, do that. If you're really, really unsure, pay for a BPO, broker's price opinion. It should cost you about 100 or 200 bucks for them to roll by and give you a pretty good estimate of what the value of that property is going to be, without having to do the full
All
appraisal,
great
which is going to usually
advice.
run you 400 or 500 bucks.
Yeah, all really good advice. Real quick, guys, for the folks who are on here with us, if you guys have a question for Bob, take advantage of it now. Raise your hand and we can bring you up here to ask Bob a question. We're getting towards the end here. We got about a minute or two. But if you guys do have a question, I'm sure Bob will probably answer that for you. But go ahead and raise your hands. And in the meantime, I do want to follow up a little bit. So if I've got a property for you guys, maybe you can run me through this really quick. And I want to bring it to Always Capital. What does that process look like for you guys?
Yeah, it's a great question. So you can head to alwayscapitalllc.com. That's our URL. And from there, there's a submit. You can literally self-service portal, submit your information, or
Mhm.
you can email office at alwayscapitalllc.com with whatever the property information is. and we'll take it, enter it in for you on that behalf. There's also a phone number. You can call that number 5 days a week from, I believe we have someone manned it from 9 a.m. to 6 p.m. Eastern Standard Time.
Nice.
And we'll enter the details in for you there. Or you can message me, or you can text me, or Brian, or anyone on our team. Like, however you want to get me the information that's easiest for you, we'll get it for you. I'm not trying to force you to do what I need you to do. We'll take care of it for you. Now, there are some steps that you'll have to do later on down the process. We have a loan origination software, allows you to upload all your documents, which is great. Why? Because now, for example, when you upload your LLC docs, guess what? You don't have to do it again next time. It's already there for you, right?
Yeah.
It just makes things a little faster and easier. But however you want to get a hold of us, just reach out, make sure we'll get you taken care of on that side.
Love it. All right. And by the way,
Sorry, one more thing.
Okay.
We will get back to you on a quote for your loan for how much money we can give you, usually within 2 business days or less. If you get it submitted in the morning, like usually before 10 or 11 a.m., a lot of times we'll get it back to you that same business day.
Nice. That's nice. All right, cool. So you'll
That's
know
not bad.
within a relatively short period of time what the situation is. And then Bob, how can folks get a hold of you? And I want to reiterate, we're going to have all the links and contact information for folks who are watching this after the fact as well in the description. But how can folks get a hold of you, Bob?
Yeah, the best way to get me is just go to go3dc.com / Bob McIntosh. So that's GO, the number 3DC for Delta Charlie, which is my marketing company / Bob McIntosh. On that page is you'll be able to add my contact card to your phone. That has all my phone numbers, all my emails, all my websites, all my social in one place. Add it right to your phone. That way you can contact me directly on anything. By the way, it is my private cell phone, so reach out to me. That's fine.
You're a
I
brave
always
man.
I answer always, right? If I got things going on, and I'm in a lot of meetings during the day, but I'll connect you with either my EA to get a time booked or just set it up directly. So that's the easiest way.
Nice. And guys, for the guys on us, for those of you here with us live, Bob just put that into the chat, so you can go there directly. But Bob, look,
I have a question.
I'll go for it. Yeah,
Yeah.
go for
Yeah, you ask everybody else in the audience, but
No
you don't
questions
even
for you.
ask.
it. No questions
Like,
for you, Brandon.
I'm just
Yeah.
chopped liver here. You
Well,
know,
you can ask anytime you want. That's the difference. So
No, it's really hard to cut in with you guys, but that's okay.
okay.
I'm for both.
Go for
Sorry.
So are you guys doing lending on co-living type of properties?
We don't lend on co-living directly, but we have a referral partner. So get us the details. We'll connect you with a co-living expert who can handle that, and we'll tackle it from there. Yep.
Nice.
Awesome. Oh,
Oh.
Elba has a question.
Yeah, we do have a question. Elba, can you turn your camera on so I can bring you up?
Hello, how are you?
Hello. How's it going, Elba?
Good. How are you?
Good.
So, for fix and flips, do you guys need like recent last 3-year experience or?
Yes. We want to know what it is. Now, it doesn't mean that we won't lend to you if you don't have any experience. It just adjusts our risk profile for you so we understand what you've done. But yeah, it's helpful for us to know that as part of the process. And look, so I want to be very clear. We're going to request more information than a lot of people realize that we need about you, not because your direct information impacts our ability to loan, but it allows for us to adjust the risk profile. If you tell me you've got a bunch of experience, I can probably get you better rates on your loan. And so that's why we ask. It's not to say that we like, hey, if you come to me with I got terrible credit or no credit and I got no experience, no problem. We'll still get you a deal done. It's just going to adjust the risk profile. But if you come to me and say, hey, I've been doing it for 15 years and I've got hundreds of flips behind me, awesome. It adjusts the risk profile. So that's why we ask.
Okay. We own a construction company
Great.
and we used to do a lot of fix and flips for like 2009, something like that. But anyway, we did, so I'm a realtor and we did 203K loans.
Okay.
We did like the rehab loan
Yep.
and we did quite a few of those, and that could count as experience, right?
100%. Yeah. I don't care where your experience came from, how you got your money, what you did for your funding. By the way, my first flip was a 203K because I didn't know how to get money at that point in time. So I get it. I don't care what I don't care how your experience was derived. I want to know that you have experience because, again, it just helps me adjust the risk profile. You tell me you've done a bunch of properties, you got a construction company, perfect. That lowers your risk profile to us. So it enables us to potentially get you more money on the deal. Can't always guarantee that, right? There's a lot of other factors that come into play, not just that, but that's why we ask.
Okay, cool. Thank you.
And
Yeah.
Elba actually has another deal that she's working on with some partners of hers that she reached out to me looking to help her find funding. They're looking at an RV park, so
Yeah,
that
RV
may be
parks.
something that, are you guys able to help with RV parks?
Yep. Yep.
Really?
Again, I don't think it's something that we directly lend on, but one of our lending
Okay.
partners can. We're a bit more risk adverse in what we do, and what that means is just because we have a fund in the way that we operate in our PPM and our docs and all that. But look, I've got someone that can do just about any kind of loan for just about anything. If it's not us, I'll connect you with the right person who can.
That's awesome.
And then we have, so one of the big differences between us and the other people out there, by the way, is we are a direct lender and we are a broker. So one of the big differences, and you'll see this with a lot of the people who label themselves as private lenders, but they're not really.
Yeah.
What they're doing is they're just collecting some basic information and forwarding it off to a lending partner and going from there. We're what we call a table lender, which means we're actually underwriting your deal for you. We're getting everything together, and then we're finding the best money source, whether it's our money source, which by the way, we have, I believe, 5 or 6 direct money sources that we control, that we can pull money into your deal for. And if we can't do it ourselves, then we've got a whole host of people that we can go to who have money. And again, because we are underwriting the deal, you don't have to go then to also talk to them, right? You're dealing with us. We're just pulling the capital in on your behalf. And if none of those can do it, then we've got partners for we call it the weird stuff, things that we don't do. Sometimes like mobile homes, we don't do. Land, we can't do yet. We'll hopefully have that dialed in before the end of the year. RV
Nice.
parks, we can't do directly, but we can help you with that and go
Mm-hmm.
from there. And there's another resource I want to point you guys to. Transparently, they are a client of mine, but I also am a paying member. It's called privatemoneyclub.com. It
Yes.
is a resource for true private money lenders, not hard money lenders. Look, I'm on there and I try to get deals for my hard money there, but it's also a whole platform of actual hard money, private money lenders.
Do you have to
So let's
pay
say
to join that? I know I came across it years ago, and I know he was offering like a paid thing, but I wasn't
Yeah.
sure.
There's
Um,
a free piece that you can get on, and then there's a paid piece. It
okay.
comes out to like $1,000 a year, I think. I might have a discount because I joined
Oh,
literally
that's
the
not
minute they launched it.
horrible. Like,
But
Yeah.
I'm going to tell you right now, if you're not a paid member, you probably won't get deals funded because the people who have money on the platform want to see that you're invested in making the
Right.
connection and building the relationship. But let's be real, like you get one deal funded, one extra deal this year that you get funded because you didn't need your money, you had a PML's money. That's worth more than $1,000 all day
right.
long.
Yeah.
Yep.
Yeah. I
So
just haven't, this was like really in the beginning when I was still learning anything about any of it, right?
it's
And I
great
came
resource.
across the Private Money Club, and I really liked what they were talking about and everything. But I definitely wasn't there yet where I
No,
was
that's okay.
even needing the money yet. So,
So I would tell everyone there's a free membership. So if nothing else, sign up for free. And when you're ready, pull the trigger on that. And by the
yeah,
way, if you are in need of money now, or very, very soon, they're doing a live event in Orlando, November 7th and 8th. And I will be there. The
nice.
last one, which was in May in Dallas, was about 100 people, and 60% of the room was looking to place money to someone in the room, right?
Nice.
Like
Wow.
had money. By the way, what's different about them, and this is not, I'm not trying to make an advertisement for them, but this is why I like the platform, is that Chris Nagel, the founder, does a lot of
Yep.
infinite banking, right? So which is a
Yep.
whole like that whole process. So he funnels the infinite banking people who have policies that need to do something with that money, or they shouldn't be like otherwise, why would you do the policy? They come in as lenders to the platform. So they literally have money sitting there that they need to lend. Now,
Yeah.
are you going to go out and find, $1 million lenders to do for? No, probably not. It's going to be a lot of like 20 to $50,000 lenders who are doing some of your gap funding or who are doing your rehab funds or something of that nature, which is totally fine. But that can be the missing piece to get a deal done that you don't have, especially if you don't have the funds yourself right now.
Right.
So I would like if you can make it to Orlando, go get tickets. They're on sale right now. If you can't find a discount code somewhere, reach out to me. I can for sure get you a pretty decent discount. I
You
think
can
it's
put
like
them
50%
in
or
the
more now,
backpack,
right?
right? And sneak
Yeah.
them in.
Trust me, come in. Like, no joke. I think we had 100 people in Dallas, and 60% were looking to place funds like in the
Nice.
next month.
Wow.
So
So, Bob, I have another question. So, from the side of wanting to be a lender, so if we found someone that wanted to lend, a decent amount of money, not just a few dollars, right? Would it be someone that we could bring to you and you would help them then?
yeah, 100%. Bring them to me. However, in our fund, you have to be an accredited investor because of our SEC regulation. So they would
Okay.
have to qualify for that to put money into our fund. With
Okay.
that said, we've got other money sources they can place money into. I personally have deals they can lend on. Like I'm always looking for money, right? And if not, I can connect them to like I've got like this is no joke across my socials and Always Capital for our group. We've got over 50,000 people, and I've got over 30,000 emails that I can.
Yeah. I
So
mean, we need funding too. So if I find them, I'm gonna hit them first. I'm
of
just
course, as you
saying though,
should, as you should.
I'm not a broker, so just because they want to lend doesn't necessarily mean I'm bringing them the type of deal that they would like to lend on. But I
Yeah,
would still like to see them be able to place their money somewhere, But
100%.
that's good
So
to know that they
I would
have to
tell you
be
something, Pansy.
accredited.
The thing that you should do, right? So, for example, if they were accredited and you brought them to us, I can't give you anything. Unfortunately, the SEC ties our hands very
Right,
tight
right,
on
right.
our ability to do that. But I can tell you straight up, I have paid plenty of people for referrals. I usually pay about a half a point on the money that they lend on a deal on the first deal, right? So that's a great way. And by the way, if you are watching or listening to this and you've got someone who needs money, if you bring them to me as a borrower, I can pay you a quarter point for that person when the loan funds it has to come from the loan has to actually
Well, we
close.
got a few names here if they come to you.
Yeah, no,
Yeah,
please
I'm
tell
one
us
of
if it came
them.
from you, right? And yeah, no, 100%. Like I want to pay you. Why? Because I need like look, I need deals. Having a fund, the thing no one talks about is like you go raise money for a fund and you're like, this is awesome, I got money. Well, I gotta have deals. Otherwise,
Mhm.
my fund investors are gonna be very upset, right? Because we have a 8 pref and we're promising or are projected right now, which we're hitting is pretty close to 11%. I can't do that if I don't have deals to lend money on. So I need borrowers as much as I need investors to put money in. So happy to
Nice.
pay referral fees for that all day long. And by the way, we do it in perpetuity. So if they come in through you, as long as that person does one deal with us every 2 years, which is not a big lift, right?
Mm.
You'll get paid on every deal that they do with us.
Nice.
I have
I
another
love that.
question. Do you do manufactured homes?
We can't do that. I do have a person that can, but we don't do manufactured homes. Yeah, no.
Okay.
For us, the risk is too great that the home disappears
Okay.
from either tornadoes or some wheels.
Yeah.
I think a tornado would take it before
But
somebody
you,
actually puts wheels on it and
Yeah.
You'd
takes
be
it to
surprised.
office.
You'd be surprised. We showed up at my grandma's manufactured home one day and it said, "Where's the home to go next door?" She goes, "I don't know. It rolled off." And I'm like, "I'm sorry,
Oh
what?"
my God.
Oh, that's funny.
but you did to reiterate, you do have someone that can fund those types of deals if somebody comes to
Yeah,
you.
just
So
bring me any deal that you got, and I'll find you a person.
love
I
it.
will do my best. There's maybe a few weird things that we can't do. Like someone came to me and was like, "Hey, I want to get a loan on a mobile home or a tiny home that's mobile," and I'm like, I don't. I mean, I can ask a couple people, but that's essentially a car at that point in time. It's not a property loan, right? And
Yeah.
I'm like, I get it. Like I understand it. It's a home, but it's like, hey, this thing's
Yeah.
on wheels, and I have no idea where it can be. It can move at any point in time. So it's like
Mhm.
those kinds of like like we had one. What was it? It was they were a chemical industrial chemical land, and they're like, oh, we're gonna like remediate the land. I'm like, I don't know if I got anyone for you that. Like they're like, we're getting $600 million from the state, and I'm like, hold on a second. Like like weird things like that, maybe not, but most standard stuff that we're gonna deal with as investors, we can either do ourselves or I can find you someone who can.
Awesome.
Okay.
Appreciate it.
Yeah, I
Yeah, I'm
love it.
definitely gonna reach out to you tomorrow.
Perfect. Yeah, just shoot me a message
Awesome.
and we'll figure it out.
Thanks for joining,
Awesome.
Elba. Good to
Oh,
see
thank
you
you.
again.
Yeah, you too.
Yeah, thank
100%.
you, Alba. I appreciate you jumping in and asking questions. It's much appreciated. So we are obviously over, but thank you guys all for being here. Thank you, Alba, for your questions. And you know, we'll have all of Bob's and Always Capital's information in the description afterwards. And we're gonna go ahead and end it. So
Okay.
thank you all again. I'm
Thank
Justin
you.
Tansey, Friends with Benefits Podcast. We'll see you again next time.
Thank you,
And
guys.
yeah, peace out,
Peace.
family.
Bye-bye.